Hello guys, good day. How are you and how are you doing today? Welcome to King's Forex Academy. Alright, in today's class we'll be explaining what Forex is. You'll be understanding the basic and everything about Forex trading. Basically, it's a day-free Forex class just to give you an understanding of what Forex is and how you can navigate the Forex market. Alright, stay tuned and let's get started. Alright, if you have not subscribed to our YouTube channel, I'd like you to just do so right now. Hit on the subscribe button. That's the only way you can support us and to keep the work moving. I know some of you have heard a lot about Forex trading. You've asked a friend, tell you about Forex trading. This is what Forex is. Okay, let's do one thing first. Can you please just go into the comment section right now? Type what you think Forex trading is. Just go straight into the comment section. Can you type what is Forex trading? Let me ask you. If you get it rightly, automatically you're going to get a gift. So just go into the comment section and say, this is what Forex trading is. Let me hear from you. Let me hear your opinion. You've heard your friends talk about Forex trading. Oh, I make money trading Forex. I do this, I do that. What exactly is Forex? Or someone say, oh, it's an opposite of cryptocurrency. It's just like, oh, the other one of cryptocurrency. This is not, it look like crypto, but it's not. Okay, is it what banks does? So what is Forex trading? Let's get started, guys. In this slide, I'll be teaching you a lot of things about Forex trading, how you can trade Forex, and how you can actually make money from the Forex trading. Over the years, my name is Kingsley. I know some of you do not know me. My name is Kingsley. Over the years, I've trained thousands of students on how to make money in the global financial market. Currently, I have over 300 students under my direct mentorship. I'm the founder of KCA Forex Academy, KCA Digital Marketing Hub, King's Crypto Academy, and the KCA Stocks and Shares Academy. Alright, there's a whole lot to learn. This tells you how long I've been in the financial market and what we have done over the years. So I'm going to be showing you the secret and how we've been able to get it done over there. So in this course, you learn what Forex is, why Forex trading, how Forex works, currency pairs, basic Forex terms, pips and lot size, types of traders we have, the trading psychology, the Forex broker trading platform, a little of fundamental and technical analysis, and KCA offers. We'll be giving it out in this class. So have you typed it right there in the comment section what Forex trading is? And you have not hit on the subscribe button, please kindly do so right now. Subscribe to our YouTube channel so that we can get more content out there, and YouTube algorithm can help promote the video. So what is Forex trading? The foreign exchange, or FX as it's popularly known, is a global marketplace for exchanging national currencies. Due to the world reach of trade, commerce, finance, Forex markets tends to be the world's largest and the most liquid market in the world, trading over $6 trillion a day. The market opens on based on Eastern time, 4 p.m. on Sunday, and close 5 p.m. on Sunday to 5 p.m. on Friday. So the market basically, if you're in Nigeria or in a part of Africa, it's just open on a Monday to Friday. Basically, that's the logic behind it. So I know someone will say, okay, with this I didn't still understand what Forex trading is. Let me break it down more for you. What is Forex trading? Let's get it a little more patient and with ease. Well, in a layman language, you could say Forex trading is just exchange of currencies. Like for instance, right now, let's assume you're traveling to Europe, to UK, or you're traveling to the United States of America, and you're in Nigeria, and when you get there, you have some nairas with you. The first thing you want to do is that because you can't spend naira in the UK, you can't spend naira in the UX, you can't spend naira in Dubai, the first thing you want to do is that you want to change it to dollar or pounds, whatever currency they are spending there, or maybe Japan, the Japanese yen. So what actually play out here is when you are changing your local currency to a foreign currency, what you're actually practicing at that point is what we call Forex. So that's the simple things to Forex trading. For instance, let me break it down a little more. For some of us who have traded dollar here in Nigeria before, who have reason to go to their bookie guys, the Peru, the change, and you're having maybe some certain dollars with you, maybe $500, $1,000, and you go to the Peru, the change guy and say, okay, guy, I want to change this money from $1,000 to naira. I need some nairas, but I have dollars. The price of changing that dollar to naira is called Forex. It's as simple as that. The price to which you convert the dollar to naira is called Forex trading. So what you just did there right now is that you just traded Forex. And now, how do they make money in the Forex market? Very, very simple. Is the difference. For instance, right now, I remember, I think earlier this year, went to the bank, saved some dollars in a domiciliary account. When I saved the money in the domiciliary account, and I wanted withdrawing the money back, as at that time when the money was saved in the domiciliary account, the dollar was at the rate of 1,482. So when I went to withdraw the money, automatically the dollar as at that time when withdrawing was 1,640. So now the difference is actually when I was saving the money 1,482, when I was withdrawing 1,640. So now when you minus the difference is around 200 plus. So on each dollar right now you make 200 naira plus. So the profit there is the difference in the exchange. Do you get it right now? So forex trading is very, very simple. It's just an exchange of currency. When you go to bank, you find out it's okay. If you are doing FX still on this queue, you want I think the first time I went to bank and I heard them say, oh, if you're actually doing FX still on this queue, the first thing that dropped from me was like, are these Yahoo guys that are trying to change euro, pounds, dollars, and the likes? But that's not it. Just everybody, any businessman who trade globally have a reasons to change, maybe from pounds, euro, Japanese yen, all sort of currency. They are changing it from their local currency, or they are withdrawing their foreign currency exchange to local currency. So that's what's called forex trading. I believe with that you could understand what forex trading is. So why do you need to learn forex trading? Number one is exposure to the global financial market. By learning forex trading, it gives you an exposure to the global financial market. Number two is a digital skill in a digital age. You can imagine yourself at the age and at this generation, you have no digital skill. That's zero, and that gets you a little bit behind. Another thing is independence. No selling, no referral, no customer. It's independence. You are not to refer anybody. You are not selling anything. You are not for any customer anywhere. It's absolutely independent. You can decide to stay in your room at any point or in time when the market is open, trade the market and make the money. So you don't have to wait for someone to buy from you, or wait for where are you going to sell to, or waiting for someone to refer someone to you. Number four reason why you need to do that is high profit margin irrespective of capital. And I think this is just the difference between crypto and forex at this junction. In crypto market, your capital determines your profit, but in forex market it's not so. You can make maximal profits with low capital. The only difference there is that your capital determines the kind of risks you can take. You can take huge risks. You can use high lot size with low capital. Automatically you may tend to lose more. You may tend to lose all the money in seconds, in minutes. And when you ask me what's another difference between the crypto market and forex market, another thing is that in the crypto market is not as volatile as the forex market. You can lose all in a second. You can make all in a second in forex market. So additional reason why you need to do that is an additional streams of income. That's point number 5. You can do it remotely, irrespective of the job you are doing at the moment. You can learn forex and do it remotely and trade remotely. It has nothing. You may be a student, you may be working class, you may be doing anything. It's always an additional stream of income. You can trade remotely anywhere you are in the world, as long as there is internet and there is electricity and your phone is with you. You can always do that. Another reason why you need to do that is the ability to earn in foreign currencies. I believe you will agree with me at this point that if you are not earning foreign currency in Nigeria as of today, it may be hard. It may be really hard for you to survive. So ability to earn in foreign currencies. Imagine yourself right now earning $10 at last year and still earning the same $10 at this year. Automatically, if you're earning $10 at last year, still earning $10 at this year, your $10 at last year may be equivalent to 10,000 naira. But as at this year, automatically is around 16,500. So even when the income is not increasing, but for the fact that you are earning in foreign currency, the value is increasing. So automatically, when naira tends to depreciate, dollar tends to appreciate, pounds tends to appreciate even far more. A pound right now is more than 2,000 to naira. So imagine that, and it's independent of the country economy realities. So you are less concerned about whatsoever is happening in the country. It helps you to stay afloat of inflation, no matter what it is per time. So that's one reason. Those are the few reasons why you need to learn the forex trading. So how does forex trading works? I think I've explained to you earlier on, but these are the major factors that determines the exchange, that determines the exchange rate. Oh, what makes dollar to go from 1,500 to 1,600 as it is right now? What makes dollar to come from 1,600 to 1,200? These are the factors, different factors. Number one is inflation, interest rate, recession, fuel, investment, political speculation, political situation, national debt, economy, and so much that we can't even discuss all. But major reason that determines it is based on political policies at times. Maybe Nigeria right now are into major debt, and as we see right now, part of my bias, basically I'm using Nigeria as an example because that's where I am at the moment. So someone listening from Ghana, from UK, okay. I'm like, okay. No, it depends on the economic reality of your country. Now, as a country, we are in a massive debt. So automatically, Naira tends to devalue the more. So these are the factors that determines how the currency tends to appreciate or devaluate. Various reasons. Recession, the country is in a recession right now. There's economy, the inflation is hyperinflation, and when there's hyperinflation in a country, automatically you expect the currency of that country to devaluate when there's hyperinflation. So those are the reasons why. And now I want to talk about currency pairs. Different currency we trade in forex markets. We have the euro, we have the pounds, we have the dollar, we have the Japanese yen, we have the Canadian dollars. We have all sort of things we trade in the market. So different. But how do they pair them together? We have the major currency, we have the minor currency, and we also have what we call the exotic currency. As you can see them here, this is the major currency, minor currency, exotic currency. But I'm going to come back there later. Let me just explain to you what currency pairs are. A currency pair is the quotation of relative value of a currency unit against unit of another currency. It's just like you talking about euro dollars right now, euro USD. So you are pairing euro with USD. That means you are buying euro with USD. That's the meaning. We are talking about Japanese yen, JPY USD, or you are talking about GBP USD. That's pounds against USD, or you are talking about the Canadian dollar against USD, CAD against dollar. So you are pairing different currency together. So in this currency pair, we have what we call the base currency. We also have the quote currency. The base currency, the quote currency. The base currency is always on the left hand side, while the quote currency is on the right hand side of the equation. You can see right here in my screen, you see the pounds on the base currency and the dollar on which is on the right, which is the quote currency. So in this case right now, what this simply means that with £1 I can actually get $1.21228 with £1. So I'm actually purchasing pounds. I'm purchasing dollar with pounds in this case right now. That's what this picture illustrates. So whatever case it is, you can be purchasing naira with dollar, you can be purchasing dollar with naira. It differs. So don't let me bug you with too much theories. So in this case, when you go long, I think that means when you are buying, to long means to buy, to short means to sell. Let me repeat: to long means to buy, to sell means to short means to sell. So when you are going long in this kind of situation right now, when you are going long, you are expecting pounds to appreciate while dollar depreciates. And when you are going short in this kind of equation, or when you are selling, you are expecting dollar to appreciate and pounds to depreciate. So whatever the case is, so you can see right now we have the major pairs, we have the minor pairs, we have the exotic pairs. The major pairs are highly volatile. As a matter of fact, if you are a beginner in trading, I don't advise you trade the major pairs. They are highly volatile. Within a second you can lose all your money, and within a second you can double your account. You can even triple your account, whatever the case is. But the minor currency are not that volatile. They are a little bit volatile, but not as extremely volatile as the major currency. And when you look at the major currency, you see that all of them are paired with USD. That's United States dollars. They are all paired with United States dollars because United States has the largest economy in the world. So they own the major currency. Anything trading with them becomes more volatile. We also have the exotic pairs, which are zero volatile. You can be on this trade in days with just low account volume. With maybe $50, you can stay on a trade in a whole day, for a whole day. But with major currency, you can't try that. Your $100, when a news is released in the forex market, can swap up immediately. You see people treat like, oh, CPI is coming, FOMC is coming. These are various news. We call them various news that determines the market situation per times. Do you get my point? So if FOMC come out right now and it goes against your trade, in 1 minute your $50 is gone. So you can't tend to do that with major currency. Now, a factor that determines when to buy and when to sell in the forex market. There are different factors that determines the movement of the currency per time. Number one are natural disasters or crisis. You can hear right now, if United States is going on a war right now, automatically dollar may tend to fall. You have seen it affect different currencies. When the market demand also matters. What is the demand for it? The government policy, like I've explained earlier on, the foreign policy announcement, the economic data release, which is something like FOMC, CPI, and major economic data release, the central bank decision. For instance, right now, Naira is what it is today based on what the central bank decision is. Inflation or change in interest rate. The interest rate of a country determines the value of its currency as well. and automatically you believe strongly well that the production unit of a country, their economic stand also determines. So these are various reasons that affect the market, and you can easily navigate this or navigate this without even having all this data by having the technical and fundamental analysis knowledge. It helps you to navigate through this easily and determines what to buy or what to sell. Now let's jump into the terminologies you may need to know before you start forex trading. These are various terminologies that you may see people mention beside you. I may have even come across them before or heard them before. Various terminologies. Number one, we have the bid price, the ask price, and spread. That's what I'll be explaining here. The bid price on the FS chart, you will notice the bid price is always higher than the ask price. This is the difference between the bid and the ask price, what we call the spread. That's exactly what we call the spread. For example, assuming Euro USD here now is trading with the ask price of 1.1918 and a bid price of 1.1916. Now the difference between 1.1918 and 1916 is what we call spread, and that's 0.002. Now this is spread. This spread is what the brokers make. That's where they make their money. So the higher the spread, the riskier it is. The lower the spread, the less risky it is. So to profit in this trade, you need the market price to rise above the bid price if you are going long, and if you are going short, you need the ask price to rise above the bid price. Now let me also explain here what buy long you have. I long Euro USD, I sell Euro USD. What did they mean? To sell means, like for instance right now I'm saying I sell dollar or I sell Euro USD. That means I'm going short on it. I buy Euro USD means I'm going long on it. So short selling currency is the same as opening a position to sell a currency pair. When a trader speculates that the value of this thing will fall, it sell it. When it speculates that it's going to go up, it buy it. For instance, right now when I sold those dollar, I actually believe that dollar is about to go down a little, so sell it, and the price came down. So I'm going short by selling it. If I'm longing it, I'm buying. So the price of buying is what called longing, and the price of selling is what called short. So when I buy, I long. When I sell, I short. A long position in forex trade, just like what I explained over time, it is when a trader buy a currency with the expectation that the value will increase over time. Now, different kind of order we have in forex trading. We have the buy limit order, we have the sell limit order, we have the buy stop, we have the sell stop. We also have the market order, we also have the instant execution, which are not featured here. But let me just explain what the buy limit means. The buy limit simply means maybe you are expecting dollar to come to 1.6 and you're not saying, okay, I will buy it. Okay, you are now setting a limit that when maybe currently you're 1,650. You now said, I want it to come to 1.6 before I buy. So you're actually setting an order that when the price comes down to 1,600, let me buy. And automatically when you send the order and you have money in your wallet, automatically it's going to trigger and buy for you when the price comes to that point. Buy stop, this one, buy stop, sell stop, are basically used by technical traders. They actually say, okay, maybe dollar is on 1.650 and I'm expecting to break a structure or to reach a particular level, then I want to enter. So they are forecasting the future price and buying at an even higher more price. They don't want to buy when it's less because they believe it until that structure is broken or formed, they are not ready to enter the market. They are not sure of what might happen next in the market. Now, what is pips? What is a pips in forex trading? I will explain what pips is. In crypto markets, we call that percentage. For instance, right now, we have traded the crypto market before. You see your market goes up 15%, 20%. We call it percentage, but in forex they call it pips, and in forex it's called percentage in points. Percentage in points. That's what they call pips. Pips is an acronym for percentage in points or percentage price interest point. A pip is the smallest whole unit price moves that an average rate can make based on the forex market convention. So now we have different pips. We have 0 points. Let me just we can go through the example because of time. I'll not be able to go through it for you one after the other, but there are different examples I cited. Let me show you here how to count pips. Now you can see here we have 100 pips, 1 pips. Now if these two, you see 1.24735 on my screen right now, if these two right now change, automatically the market has moved with 1,000 pips. Wow, that's a big money. If the market moves with 1,000 pips and you're trading with $10 alone, you can imagine, and your lot size, maybe you have maybe 0.01 lot size. I mean, you're going to make a very cool money, at least maybe minimum $100. Now, if it change with, if this 4 change in the figure, automatically the market has moved with 4 pips, 100 pips rather. If this 7 change in the figure, it has moved with 10 pips. If this 3 change, it has moved with 1 pips. If this 5 change, it has moved with 0.1 pips. Now, this differs basically also. If you are trading a pair with Japanese yen, automatically it differs. This rule is valid in all currency pair, exception of Japanese yen. It's not valid with Japanese yen. Their currencies a little bit differs. and they have a different way of calculating their own pips, and based on the lot size you're also using per time. Don't forget, these pips is just like talking about percentage. So some say, oh, I just make 100 pips. Now that fact that he makes 100 pips does not mean that he has made $100. It depends on the kind of lot size he's using, will determine what he has made on that trade. If it's in crypto market right now, you want to know the leverage he's using, you want to know the capital he puts in the trade on the trade. That will determine how much you could make from it. But in Forex, your capital does not really count. What counts is the pips and the lot size, and your capital just help you minimize or manage your risk. For instance, now if the Euro USD move from 1.1, you can see here right now, 1.1025 to 1.1035, based on what I explained to you here right now, is the 3 that change. Are you getting me? Or sorry, is the 7 that change right now. Now imagine what change here. Automatically the market has moved what? With 10 pips. So now when you multiply these pips down by the lot size you are using on that trade, that gives you what it is. Don't worry, there's still a practical section that explains all these things in practical terms, and you can get them later on. But this one is just a theory part of it. Just give you an understanding, just like the topic is understanding Forex. Just give you a basic understanding what it is like. Now, let's discuss what is lot size. Lot size, like what we used to say, is a leverage. We call it how many x, 10x leverage, 20x leverage in crypto market. But in Forex, it is called lot size. What lot size are you using? Is it 0.1? Is it 0.000, 0.1, or is it 1.0? That's the standard lot size. What lot size are you using? Or 0.01? We also have the micro lot size. So a lot size in Forex trading is a standardized unit of measurements used to describe the volume or size of a particular trade. A lot represents the amount of a currency bought or sold in a trade. That's what it actually represents. The value of a lot is set by an exchange or a similar market regulator. That's the determines what the value of the lot is. Lots are subdivided into 4 sides. We have the standard lot, the mini lot, the micro lot, and the nano lot. All these things may look like grammar because we may not actually get it in real times, until you get into the practical section of it. That's when you get it in real times. So we have standard lot here, mini lot here, micro lot here, and you can see them here. You can see 1.0, 0.1, 0.1, 0.01, 0.01. 0.001. I would just advise a beginner in Forex trading to use 0.01 to start with, so that you don't tend to put yourself on too much high jump and tend to lose more money. Different type of traders we have. We have the scalpers, we have the swing traders, we have the trade traders, we have position traders. So they all differ. We have different kind of traders. So it depends on which one you want to be. Now let me explain to you. The scalpers are those who enter trade within 1 minute, they jump out. Just within 1 minute, they enter a trade and they jump out. They enter maybe 5 minutes, 10 minutes, 15 minutes. Once it is their take profit, 30 pips, 20 pips, 40 pips is okay for them. Those are scalpers. 50 pips maximum, they are okay. But day traders are those who are ready to stay in the trade for hours, not minutes. They have to stay in the trade for maybe 5 hours, 6 hours, a whole day. We call them day traders. These kind of traders are looking for maybe 100 pips, 500 pips, 1000 pips. Any kind of trader you be determines the kind. It will be determined by the kind of capital you have. With $50, with $30, with $20, it can't be a day trader because the market can actually wipe it off within minutes. We also have the swing traders. Typically hold trade for 2 to 6 days. These are traders that hold trade for weeks. Like 1 week, they can be on the trade without stepping out. Are you getting me? So we call them swing traders. They can enter a trade on Tuesday, come out on Thursday, on Friday. I can call them swing traders. We also have position traders. This kind of trader enter a trade for months, 1 month, 2 months, 3 months. They can stay tuned on a trade. But this is all based on the kind of capital you have. Your capital determines how long you could stay on a trade. Now we also have the different types of trading and traders and their trading strategies. You can see it here. You can see here, right here. You can see the scalpers. Their time frame short term. They can enter like 5 signals a day, 10 signals a day, minutes. I mean, within a minute, they are out of the trade. They are always active, looking how the trade moves. You can see day traders here. I mean, few trade, maybe 1 or 2 trade in a day maximum. They can stay on for hours. You can see swing traders here, maybe 2 or 3 trade in a week, few weekly. Then they don't stay too long on trade. They stay very long on trade, 1 hour, 4 hours, a day, 2 days, 3 days. And you can also see the position traders here. Their own strategy, long term, maybe 1 trade in a year, 2 days a year, 2 trade a year, 3 trades maybe maximum in a year, or 1 trade in a month. That's how they trade, and they tend to also make money from the market depending on which one you are standing with. Now let's talk a little about trading psychology. How does the market work and play on our psychology? We have different trading psychology, which are basically revolute around these 4 things. You can see greed, doubt, fear, and FOMO. FOMO is called fear of missing out. It's also more or less like fear. Now, the different trading psychology we have. Trading psychology refers to the study and understanding of the psychological and emotional aspect that influence trader decision, behavior, and performance in the financial market. It involves examining the impact of emotion, cognitive biases, self-control, discipline, and mental states or trading outcome. Now, let me break it down, not to make it too complex for you. Trading psychology is just based on your emotion. Actually, the market work based on our emotion. Is actually playing on our emotion most times, trying to study, okay, is this person afraid? Automatically, some of you have entered forex market before, and after a major loss, you didn't even come back. You can't even open MT5 again. You can't even open your broker again because wow, you have tended to lose a whole lot. Now that reminds me, in this class, I think later I'll be explaining to you how you can actually make money from forex trading without having MT5, without having Xness. Oh, amazing! Does it exist yet? It really exists. I've made money via that system several times without even having to come through the market directly. Now, for you to be a profitable trader, different thing you need to do. You have to have a trading plan, take regular break, trade minimum 3 times, maximum 3 times a day. Don't overtrade. Overtrading kills. I think I've seen students come to me, oh, I want to join a signal. How many signals do you drop in a day? Wow, immediately the impression they gave me when asking how many signals I trade in a day, it's just telling me like, oh, this guy is childish. He doesn't even know what trading is like first. Because if you are just looking for someone that will give me 10 signals, 5 signals a day, the more signals, the more chances of you losing. That's the meaning. 2-3 signals a day. It's not about how many signals, it's about how profitable those signals are. How many pips can you catch on this trade? Having a trading plan, it's important. What's your trading plan? Do you even have any trading plan draft out? You only have it in your head. You can't make money that way in trading. Then take regular break. Don't trade all the days. I know one of my mentors, he only trade Tuesday, Wednesday, Thursday. He doesn't trade on Monday, he doesn't trade on Friday. Just a few days in a week. You just won't trade, like if possible, you won't trade on Saturday and Sunday. If the market is not open, you want to open by force. No, you won't make money that way. You may end up losing money that way. Don't quit your daily job to trade. That may be one of the biggest mistakes. I've seen students come to me on several occasions. So I want to resign from my job to go about trading. I tell them, don't try it. That would be a big mistake. Don't try it. Don't try it. Trading is a very long time thing. I've been in this system now for more than 4 or 5 years. Yet, we haven't there's no point to which you can become perfect on this trade. You still keep learning. So some people just want to come one day, like I'm going to resign today and take training. Wow, those people always end up in regrets, in big regrets. No, you don't do it like that. Handle it wisely, handle it gently, take it step wisely. I'm going to start today, I'm going to stop tomorrow. It doesn't make sense. That will be ready to lose money as well. Be ready to lose money. Don't be too big to use stop loss or take profits. One thing they don't tell you is that they will tell you come and trade. You're not going to lose money, you're going to make money. The truth is you're going to lose money. I've told some of my students when I want to tell you that the first 1 month, 2 months, be ready to lose. So come with the money you can afford to lose. One of my students asked me, they're like, sir, I want to start trading Forex. Immediately, I want to start, sir. I want to start. How much? I said, calm down. I've just lost $700. I want to come with, how many capital? I said, start with $20. I'm like, $20. How will I start with $20? I've lost $700. Which day will I make money back? You see, revenge mission does not exist in trading. Don't come on a revenge mission. When they come on a revenge mission, the market tends to take more from you because at that point you are emotional and you may end up losing more than you bargained for. Start with what you can afford to lose. Even if you have $500, start with $10. It's for the next 1, 2, 3 months. And practice over and over again. After that, you have learned so much that you can come at once and tend to make more. You see, practice makes perfect. The more you trade, the more you learn. But you start with $100, that's why some of you can't even trade again. Because you start with so much huge capital and you have lost all. Backtest over and over again. Don't just go live immediately. That's why you have the demo accounts. I think one of the advantage the Forex market gives give you the opportunity to trade demo before trading live. You can actually go on demo before coming live. So why not trade the demo account first? Trade over and over again, backtest the signal. That's why anybody that purchases our HZ course, one of the things I used to give them, I give them 1 month free signals. Let them have an opportunity to backtest first. Don't just jump into the trade, because if you jump in, you will jump out eventually. So you can see real nervousness, overconfidence, fear, greed, anxiety, FOMO, and doubt. These are the things that work on traders' emotion. What is Forex brokers and who are they exactly? Brokers are always intermediaries. A foreign exchange brokers or Forex brokers is a financial service provider that lets you buy and sell. And matter of fact, we are retail traders. We are still trading less than $1 million. We are still seen as retail traders. The major institutional traders are those who trade with above $1 million. Oh, $1 million is like talking about 1 billion naira. That's huge. Far more than that even right now. So that's very, very huge. So can you trade the market with that? No. So the guys that actually bought, like they are the wholesale, they buy, they give us the opportunity to come into the market through them are brokers. That's why you see someone like XNet, someone like OctaFX. They are FX brokers. They are not the platform themselves. They are brokers that give you opportunity to trade the market by coming through them. So we are retail traders. So you can trade with $10 with them. So they combine all the money together and execute the trade. So it's a bit like a middleman between the traders and the interbanks. Component of good brokers, they have good performance statistics, commission and fee are not too high. Deposit and withdrawal are very, very easy. You can deposit and withdraw within a day. Spread are not too high. The spread is very, very low. They are licensed and regulated by the FCA, which are the forex broker regulators. So these are the things you have to look out for before you choose a broker. So if you're Nigerian, I recommend XNet, I recommend OctaFX. You can find the link to your XNet or OctaFX directly in the description below of this video. There is a link there, right there, where you can find the link to register with XNet, the link to register with OctaFX. They will help you a long way. They have been verified over and over again, and they work perfectly well in an African country. And if you're outside the country, you can use Deriv, you can use the one applicable. There are different brokers, there are US regulated brokers applicable to your region. All that matters is that they are regulated with FCA. So this is very, very important. And you see their spread, their withdrawal system, easy high. These are the things you tend to know as well. So now, Forex trading section, as I've told you earlier on, it differs based on different region as well. But we are in Nigeria Monday to Friday. That's all you need to know. Early, maybe around 8 a.m. already, or before 8 a.m. I think as early as 4 a.m. or 3 a.m. the market is already open. I don't trade in midnight, so I'm not really specific. So the market's open on Monday and close on Friday 4 or 5 p.m. You should be out of the market by then because the market already closed. So these are different time zones and sections. You can see the Tokyo section, the London section, the the New York section as well. You can see the Eastern time, the GMT as well. They are all here. Now, best Forex trading platform. I recommend MT5 for anyone trading. MT5 is always advised if it helps you the more. We have the MT4, we have the MT5, but MT5 tends to have more features than MT4. And you can see them here. You can see the kind of execution. You have like instant execution, market execution, request execution. Meanwhile, on MT5 you have instant market request and exchange execution. So this help you more. Now, fundamental and technical analysis. Let me just talk a little on fundamental and technical analysis. Then we'll call it a day there and round off here. Now, fundamental analysis. For fundamental analysis is just about studying about the intrinsic value of an asset. While technical analysis is about studying about the past performance to determine the future performance. You can see various things here. Now, fundamental analysis can study for they are used for long-term investment though. Technical analysis is used for short-term. So if you are trading one day, day trade, scalpers, swing traders, I will advise you go for technical analysis. It will help you more. You are looking at what the market has done in the past to determine what is likely to do in the future. So when you're looking for fundamental analysis, you're actually considering useful for trading and investment. Why technical analysis is for trading alone, to find out fair value and security, fair value of security. This one determines, you can look at various data here, but let me just explain in layman language. When you're talking technical analysis, you're talking about maybe you are looking at the CME gap, you are looking at the fair value gap, you are looking at the support and resistance zone, you are looking at the what's called, you're trying to draw the resistance line, you are trying to get where the gaps are before you enter the trade, you are trying to look at the triangle it's forming. Is it a symmetric triangle? Is it a descending triangle? So many things you are putting in place while looking at technical analysis. Why fundamental analysis? You are waiting for the news. You are waiting for what is likely to happen on this data, what's happening on their economic data release, what did they just say about this country right now, what is their interest rate you get. So now, for instance, also let me make it a little bit simpler for you. For instance, you want to buy a phone and your friend tell you, okay, buy this Samsung right now. I've used it before, it's very good, buy it, he's recommending it for you. Now he's talking based on his experience, based on what Samsung has done before. Now you get to the market, you want to buy the Samsung, you're like, oh, this Samsung, okay, my friend has mentioned it before, this Samsung Galaxy so she gets. Now you're also looking at the battery. Now he may not have mentioned, now the battery right now is talking about the intrinsic value. He's talking about the value carries the battery, the graphics. You are talking about the value the phone itself is having, not based on what you have done, not based on what have happened before. You are looking at the intrinsic value. That's what we call fundamental analysis. So we get fundamental analysis in Forex absolutely different from fundamental analysis in crypto. Yes, you need to get that right. In crypto, we talk about them. Let's look at the team. Let's talk about so many things. Let's talk about the number of tokens in circulation, so many things. But in Forex, it's absolutely different. We're looking at economic data release. We're looking at news. We're looking at what the institutional traders are doing. So many things we are looking at when it comes to Forex, which in crypto we don't. So that's all on technical analysis and fundamental analysis. Now, we have come to the end of the class. Let me just do a short thing for you guys. Let me share some of our KCA FX student testimonial with you. Then let me give you an offer for those who would like to join our master class. I'm going to give you an offer straight away. So come and look at their student testimonial, what our students have done over the years. You can see right here on the left hand side, you can see this guy saying I closed the trade halfway, and you can see how much this guy make. This almost $30 on a single trade. You're seeing here, you're a genius boss. I just wish to know, just like you. Now this guy was in my signal room, and this is what he has make over in a trade. You can even see their name. Yeah, these guys have been with us over and over again. This guy made $162. I think this is a demo I can do and make this on a single trade. Today's earning, you can see here is one of my crypto students, which later on, that's why his name is saved with Kelly Fresh King's Crypto, before he later on joined my FX class as well. So you can see how much these guys has made on the trade just in a single trade like that. We can go on and on and on and on. If you want more testimonial, you can just go straight to our Telegram channel. You see the media part of it. Go there, you see videos of our monthly trading results. So many. You can see screenshot of different student charts and how much they have made over and over again on the trade. So you can see here right now, you can see the student here talking about how much he has made on the trade. This trade going fine. This after 8 p.m. Shall we close right now? And has reached my TP. Don't never reach it. Has not reached my TP, but it has made like roughly, if I'm not missing, like roughly $8 on that trade already. You can see this one here, roughly $12 on the trade over and over again. We can't even show you all that there is. Just go to our Telegram channel, check the media, so you see it over and over again. See this one here, thanks boss, it is my stop, and I reopen again the position again, and then it is my take profit, and it made $14. It made $5 here. You can see it here. You can see I missed the signal. You can see I bought this one little one. So over and over again, guys, we have guests of different testimony. This was on pounds, Japanese yen, over 103 pips collected already, and you can see the results. So just go, when you go to the media channel on the Telegram channel, the media part, you will see different monthly results of our trading signals. We'll take you straight to the signal room, show you each trade that was dropped and what was the result. I mean, you can see it. Someone asked one day, what's the accuracy of your signals? I told the person over 80% accuracy. We don't have 100% accuracy, but we can grant you over 80% accuracy. You can ask any of our students who have been part of us before. Now, these are all our social media, and you can follow us up on Telegram, on Twitter, Binance. For those who are crypto traders, you can see us on Instagram, YouTube, and these are all our social media, and especially on this Telegram channel, we tend to release more. Now, let me run this up by giving out a discount and an offer for those who say, okay, sir, I've listened to your class and I would like to make a proceed. Now, all we have explained to you is just theory. If you want to go into the practical, where we take you hand to hand, one after the other, showing you all that it entails in the class, how you can take a trade, what and where, how to set up your account. We take you how to set up your account, and basically the practical terms of how you can even trade Forex without opening Xness, without having a broker or anything. How you can trade with ease without even having to go to MT4, MT5, a low risk and make high money. I explain everything in this masterclass. And the masterclass, we have the crypto, we have the Forex, we have the signal, we have the HZ class, and we have the mastering technical analysis. We have the HZ course right here, which explain a lot in this course. Let me start from the below and go up and explain to you. Let's start from the KCA FX HZ course. In this KCA FX course, we explain a whole lot. We explain how to set up an account, how to trade. You see live trade. We took live trade on it, how to open a demo account, how to fund your account, how to withdraw with ease. Practical, no theory, no presentation. They are all practical videos. All practical videos, and also they come with live mentorship, lifetime mentorship. If you are buying the KCFS course, automatically you have access to live mentorship. You can see the price here. Currently we are selling for $50. I remember some time ago this course was selling for I think 10,000 naira or 15,000 naira. We've even sold for 10,000 naira before, but well, as the value increases, the price increases. So what you are seeing right here, right now, is not still static. It can change tomorrow, but we are getting it right now. You can actually get it within 24 hours. We are using out 50% discounts, which helps you to get for $25. If you are paying within the next 24 hours, you can get it for $25. And we can see our KCA FX Mastering Technical Analysis course going for $100. This one is basically, except you have purchased the HZ course, I don't think you need a Mastering Technical Analysis course, because that one is for those who want to gain Mastering Technical Analysis. Technical Analysis is a course on its own. I remember talking to one of my mentors. He set his own technical analysis course for $1,000. $1,000 is about 1.6 million for a single course. 1.6 million, that's massive. So one day we were having a class. I was telling one of my students, like, oh, these are technical analysis course in one of our crypto class. And one of the students, they asked me, and they were like, sir, this is actually cheap. I just bought a course last for $500 on same technical analysis course. I was shocked, $500. Mine is even far cheaper. So this is basically for those who want to gain mastery. Maybe you are a mentor to some students and want to learn how to do technical analysis raw, and we talk about different concepts in technical analysis course that you can't even exhaust. Is it support and resistance? Is it how to draw chart patterns? Is it on Fibonacci retracement tools? Is it on a lot different strategy? The ICT strategy was covered, the SMC strategy was covered fully. I mean, is it area of liquidity? Is it the zone? A lot. I can't remember everything that was covered in the course. If you want to see all that the course entails, you can chat me about. I'll send you all that it is in that course. So the HZ course is basically for traders. You want to learn how to trade, you want to see all the things, how to start trading immediately, that you can start making money as well immediately. This is actually for you. This also comes with 1 month Signal Room free offers as well. We also have the KCA FX Signal Room. The KCA FX Signal Room is going for $20 monthly, but for those who are watching this right now, you can actually get it for $10 monthly. This one is only applicable if you can trade before. You already know how to trade, you can trade already, you just need signals to trade with. You can get it. Signal Room. I think we have a lot of students currently, I think maybe over 50 or so, who are in the Signal Room. You can join with ease. You can join this with ease. It's going to help your trading. I mean, you can see all the signal results right there. Then lastly, on this note, we have the KCA FX Signal Room, which is yearly plan. We are going for yearly plan. It's $100, but if you're going to pay, I'm going with a 50% discount, you can get for $50. This comes with the KCA trading plan strategy. This comes with life mentorship. Automatically in the life mentorship, you have access to KCA trading plan and so many of our. Lastly, on the notes, you have the 60 days money back guarantee. This is all comes with all our product, either on the crypto product, the shares product, the forex product. They all come with all our product. This is a money back guarantee that guarantees the fact that after 60 days practicing all we have told you or all we have instructed on ground, and you purchase any of the course or any of this, you subscribe to any of this offer and you didn't make your money back, it will be refunded back fully to you. We have refunded people money back on different occasions. If you have a genuine reason and you can show us that, oh, I've done all this and I haven't gotten results, I've refunded back on different occasions, refund your money back to you if you have followed all we asked you to do. So guys, this is what we call it a day right here. So please endeavor to share this video. If you have not subscribed to the YouTube channel, please kindly hit on the subscribe button right now, because with that you can get to learn more and have more things from us, from KCA. Thank you so much, and please have a wonderful day.